Let's dive into the Pi Network, a project that stirred up the crypto world and captured the imagination of millions. Whether you're a crypto enthusiast or just someone curious about new tech trends, Pi Network is a name you've probably heard buzzing around social media and online forums. Pi Network claims to be a new cryptocurrency you can mine on your phone just by tapping a button daily. Unlike traditional cryptocurrencies like Bitcoin or Ethereum, which require powerful computers and lots of electricity, Pi promises a greener, more accessible way to participate in the crypto revolution. The goal? Make crypto accessible to everyone, not just techies with expensive hardware. Pi Network wants to level the playing field, allowing anyone with a smartphone to join in, regardless of their technical background or financial resources. This simple approach has drawn tens of millions worldwide, all hoping to catch the next Bitcoin-like wave. The community is vibrant, with users from every continent sharing tips, forming groups, and speculating about Pi's future. The appeal is clear: no upfront cost, just a daily tap, and maybe, just maybe, a shot at future riches. For many, it feels like a lottery ticket you don't have to pay for, and the dream of financial freedom is just a tap away. But here's the catch. For years, Pi has been stuck in an enclosed mainnet. That means users can see their Pi balance grow, but they can't actually use, trade, or withdraw their coins in the real world. You can't trade your Pi on exchanges, and you can't cash out. Its value is just a number on a screen. For many, this has led to frustration and skepticism, as the promise of easy wealth remains just out of reach. This has sparked endless debate. Is Pi a revolutionary project or just a data collection scheme with no real product? Some believe it's the future of digital currency, while others warn it could be little more than a clever app with no substance. Fast forward to today, June 11, 2025, a massive transaction has shaken the community. For the first time in years, there's real movement on the blockchain, and everyone is watching closely. Hundreds of millions of tokens just moved in a single, mysterious transfer. The scale and secrecy of this event have fueled speculation that something big is about to happen. This could be the signal everyone's been waiting for, the open mainnet launch where Pi might finally get a real market price. If true, it could transform those digital numbers into real-world value overnight. The long wait could be ending, and the stakes have never been higher. For early adopters, this moment could mean the difference between a wasted effort and a life-changing windfall. So, what does all this mean for you? Whether you're already mining Pi or just hearing about it for the first time, understanding these developments could help you decide if Pi Network is worth your attention, or if it's just another crypto dream that's too good to be true. Here's the headline. A wallet linked to the Pi Network team just moved 200 million Pi tokens to a new unidentified wallet. In crypto, big transfers happen, but this one is massive, impossible to ignore. It wasn't a public sale. It was a private, off-market deal, executed quietly and without warning. The move hints at a major shift, possibly a new player entering the Pi ecosystem. For years, Pi's supply was tightly controlled, with coins only mined through the app. Now, this transfer suggests a strategic change, maybe even a prelude to going public. The community is split. Some see it as bullish, others fear centralization or a future price dump. Either way, this transfer has forced everyone to pay attention. The passive waiting game is over, something big is brewing. The stakes for Pi holders just got real. That huge transfer? It was likely an OTC, over-the-counter purchase. OTC means a private deal, not a public exchange trade. Why go OTC? To buy huge amounts without spiking the price. If someone tried to buy 200 million PI on an open market, the price would skyrocket. OTC lets buyer and seller agree on a price, away from public eyes. For Pi, which isn't on exchanges yet, OTC is the only way for big players to get in early. This suggests a major investor believes in Pi's future and wants a big stake before launch. It's like a pre-IPO investment, a bet that Pi's public price will be much higher. The buyer could be a VC, a corporation, or a wealthy consortium. Whoever it is, they now hold serious influence over Pi's future. This private deal has set the stage for wild speculation. Only time will reveal its true impact. Let's look at the upside. There's a real sense of excitement in the air, and for good reason. This isn't just another headline. This could be a pivotal moment in Pi's journey, one that changes everything for its community and the broader crypto world. For Pi believers, this transfer is a huge vote of confidence. It signals that major players are finally taking notice of what the Pi community has been building for years. Why would anyone invest millions in a token with no value? That's the question skeptics are asking, but the answer might be simpler than it seems. They must see real potential. Maybe it's the technology, the vision, or the sheer size of the user base. Whatever it is, it's enough to convince serious investors to take a leap of faith. Institutional money could be the catalyst Pi needs to finally launch its open mainnet. This kind of backing often marks the turning point for projects on the verge of something big. The funds might accelerate development, security, and marketing, bringing the finish line closer. With more resources, the team can tackle technical challenges, scale up operations, and reach new audiences faster than ever before. A big investor also brings credibility, silencing critics who called Pi vaporware. Suddenly the project isn't just a dream, it's a serious contender in the crypto space. This could attract more developers and businesses, creating a domino effect of growth. As new talent and partners join, the ecosystem becomes richer and more dynamic. Pi already has a massive, engaged community, something most crypto projects dream of. Millions of users are ready to participate, innovate, and help Pi reach its full potential. An institutional backer sees this as an untapped asset, ready to explode once the ecosystem goes live. The groundwork is set, and the stage is primed for rapid expansion. The transfer could unlock Pi's global network effect, turning millions of users into active participants. Imagine the possibilities when people from every corner of the world are connected through a single digital economy. For the community, this might be the moment their patience finally pays off. Years of waiting, building, and believing could soon be rewarded in a big way. The potential for a thriving digital economy is real. If Pi delivers on its promise, this could be the start of something truly transformative, not just for early adopters but for the entire world of digital finance. But let's not ignore the red flags. The deal was secretive. No announcement, no details, no transparency. Who bought the tokens? At what price? The silence breeds mistrust. Selling 200 million tokens to one wallet risks centralization. One player could manipulate the market. This goes against Pi's promise of decentralization and fairness. The project is still in an enclosed mainnet, with no firm launch date. Some fear this is just insiders cashing out before proving real utility. Millions of users have waited for years, only to see a secret deal for the wealthy. The community's trust is on the line. Let's talk numbers. This is where things get wild, and the story of Pi's price takes a turn into the unpredictable world of speculation and hype. Officially, Pi's value is zero. It's not listed on any major exchange, and you can't just buy or sell it like Bitcoin or Ethereum. But that hasn't stopped people from trying to put a price on it. Enter Pi IOUs. These are essentially promises to deliver real Pi tokens in the future, once the network goes live. These IOUs are being traded on a few smaller, less regulated platforms, where buyers and sellers are betting on what Pi might be worth someday. Right now, these IOUs are trading for around $40 each, a number that's caught the attention of both hopeful investors and skeptics alike. If you take that $40 price and multiply it by the 200 million tokens involved in a recent transfer, you get a staggering $8 billion valuation, at least on paper. But let's be real, the buyer in that over-the-counter deal almost certainly got a massive discount, maybe 90% or more off the so-called market price. Even after such a discount, it's still a huge transaction, one that's worth tens or even hundreds of millions of dollars, depending on how you calculate it. Deals of this size are rare in the crypto world, especially for a coin that technically doesn't have a real market price yet. The news of this deal sent IOU prices soaring by 10 to 15% almost overnight, fueling even more bullish sentiment and speculation among traders. But it's important to remember, these prices are pure speculation, driven by hype, FOMO, and the hope that Pi will become the next big thing. There's no real utility behind these trades yet. No products, no services, no ecosystem where Pi is actually being used. The true price of Pi will only emerge when it's finally tradable on open, regulated exchanges where real buyers and sellers can set the value. Until then, everything is just a guess, a bet on the future, not a reflection of current reality. When Pi does launch, its price will depend on a few key factors: how many coins flood the market, and what people can actually do with them. If there's a huge supply and not enough demand, prices could drop quickly as early holders rush to cash out. On the other hand, if Pi finds real-world uses, like payments, shopping, or even gaming, demand could help support or even boost the price. A massive supply with little demand could send prices tumbling, as we've seen with other new cryptocurrencies. But if people actually start using Pi in the real world, that could create genuine demand and help stabilize or even increase its value. For now, the $40 IOU price is mostly hype, an inflated number based on excitement and speculation, not on real-world transactions. So, when Pi finally hits the open market, expect the real price to be much lower at launch, at least until true demand and utility are proven. In the end, only real demand, real utility, and real-world adoption will set Pi's true value. Everything else is just noise. Beyond big deals, there's a grassroots problem, KYC. Many users are stuck in the Know Your Customer process, unable to move their PI to mainnet wallets. Months or years of waiting has left people frustrated and anxious. The lack of communication from the core team only fuels distrust, especially after a secret 200 million token deal. Optimists say the team has a plan. Skeptics see a lack of accountability. The community is divided, and trust is wearing thin. The next moves by the core team will either restore faith or deepen the cracks. So what's next? All eyes are on Pi Day 2, June 28, 2025. This date is loaded with speculation. Will the open mainnet finally launch? Will the core team reveal their new partner? The timing of the big token transfer seems too perfect to be random. If the open mainnet launches, Pi coins could finally be traded, and a real price will emerge. This is the moment pioneers have waited for. Digital coins turning into real value. But manage your expectations. The core team moves cautiously. Even a partial announcement could spark mixed reactions. June 28th is now the focal point for hope and anxiety. The Pi network is at a crossroads. The 200 million token transfer has forced the project into the spotlight. The next few months will decide if Pi lives up to the hype or fades away. Watch for official communication. Will the core team explain the deal and outline next steps? Pi Day 2 is a make-or-break moment. A big announcement could electrify the community, while a letdown could deflate it. Keep an eye on KYC progress. Users need access to their assets. Look for real apps and services on the Pi platform. Utility is key. And of course, watch the market. If Pi hits exchanges, its price and stability will tell the real story. For now, Pi remains a high-risk, high-reward experiment. The next chapter is about to unfold. Will Pi launch a rocket or just fizzle out? We're about to find out.